Well, despite the wild swings of the month and the drubbing of this week, a couple of trends have emerged that should warm the hearts of middle America. The stocks of places that people eat and drink have been on fire, underscoring a renewed confidence that is now morphing into reality. Now, of course, last week, it was the restaurant stocks, the parent of IHOP and Applebee's, Outback Steakhouse. These stocks rallied anywhere from 10 to 25% for the week. This week, we're actually seeing it in brick and mortar names. Today, TJ Maxx was a huge winner, and yesterday, Dillard's department store was big. Now, the move in Dillard's actually very intriguing, considering I think it's a perfect proxy for what they call so-called flyover country, as the company's top 11 state locations were all states won by Trump in the presidential election. So with consumer spending sure to pick up, the key is, will it be enough to keep the economy and the stock market rally going? Let's ask Jeremy Siegel, finance professor at the University of Pennsylvania's Wharton School. Professor, thanks for joining us. I should point out to the audience, in January, you called for a 10% correction. We got that 10% correction, but there's a confluence of things going on. Where do we go from here?
Well, I think we saw what happened after the Powell testimony to Congress, and I now think the market's going to be waiting till March 21st. March 21st is when his first FOMC meeting and conference, the new dot plot, that very important document that tells about projections on Fed funds. So I think it's going to be a really kind of back and forth market without really strong gains at all until we see a little bit more clarity at the end of the month.
Well, I know that meeting will also be important because unlike the fiasco we saw yesterday in the House of Representatives where our elected leaders took all the time to push their own agenda, we'll get a real outlook perhaps from the chairman. But that's a long time for the average person to live with these sort of market gyrations. Is that just a reality of life?
Well, we're getting back more to what the markets used to be like. I mean, we had a 6-month period of remarkable, I don't think the Dow moved 100 points from high to low in a record number of periods. Now, it's a little bit more volatile than we usually have now, and I expect that to settle down. I mean, last December, I was, asked to give a projection for this year, and I said it's nowhere going to be as good as 2017. The main reason would be rising interest rates, but I still think it was going to be up, anywhere from flat to 10%, which is, maybe a 5% increase, and certainly is going to be better than you can do in bonds. But I think it's going to be a much more difficult year, 2018, than what we saw last year.
What do you think from a stock point of view? Because last year, for the most part, it was a handful of companies, 5 companies that really powered the market higher. And to be quite frank with you, there's only 3 or 4 this year that have kept us even where we are now with the major indices. A lot of people are wondering, when does that buying sort of spread out to the rest of their portfolio?
Well, through history, there's always been a few stocks that have powered rallies if we go back. But believe it or not, I'm beginning to think that dividend-paying stocks, which have really been hit because of the rising rate environment, might deserve a second look, because if you want income but you want growth and protection from inflation, I think some of those stocks provide the answer. Bonds cannot provide the answer. So you want to stay away a little bit from, stock volatility, counting on capital gains. It might surprise the market to actually see some movement towards the dividend-paying stocks, which have been left behind so much over the last 3 months.
Yeah, I mean, utilities got ahead of themselves, and to your point, started to correct in December. They were even down yesterday when everyone else was up. So maybe that will be the sleeper. Professor, thank you very much for coming on. We really appreciate it.